tired this morning. All right, just let me know when it starts to share. Is it sharing?
Good. Yep.
Alrighty, guys. So news going into this week. You got a bond auction on Monday at 1 p.m. Nothing crazy there. Going into Tuesday, 8:30. Obviously, core CPIs month on month, CPIs month on month, and year on year. Obviously, if you don't know what CPI is, CPI to me is the most volatile news event each month. It is not like NFP where it just might go up and down or kind of sporadically go. It's more of just like an instant redelivery in price. So even if you think you're good in the market, whatever the case is, if you are offsides or on the wrong side of the market when this delivers, this is the news event that could not necessarily fill your stop loss, your take profit. The way it redelivers so quickly, you're not gonna. There's times where you won't get filled on any of your orders at all, so it's not going to account for your stop loss or anything like that. So this is a huge, red folder news that you want to just try to stay away from. Don't trade it. Don't trade ahead of it. Study to see you as a trader how you react with once it redelivers at the time of 8:30. How long does it take you to kind of maybe get your bearings, maybe see a model following it, but definitely going up and leading up and towards that 8:30. I would definitely just be a student and do not trade that CPI. Just watch it, see what it does. With it being yearly and monthly on top of each other, I do expect it to be probably pretty volatile. So just, responsibly study and do not be a participant ahead of it. You also have another 30-year bond auction. So you have a 10-year bond auction on Monday. You have a 30-year bond auction on Tuesday. Wednesday, 8:30 a.m. You have PPIs month on month, right? No yearly PPIs tomorrow, just or on Wednesday, just the monthly core PPIs and regular PPIs. And PPIs are fine. They're not as volatile as something like a CPI. And whether you're trading ahead of it or following it, it's perfectly fine. And then in the afternoon on Wednesday, going into 2 p.m. in that PM session, you have a funds rate, obviously FOMC projections in the statement, and then at 2:30 the press conference. This is something where this type of news event is kind of elongated. It almost seems like it's like for almost like a whole hour. So if you've never seen FOMC or you never studied it, please study it. I reckon that you would want to prefer to not be in that 2 o'clock to 3 o'clock window as you're studying it. If you're new, if it's obviously your experience, great, do what you want with it. I like preferably waiting till like 3 o'clock, especially in this month. FOMC already has seek and destroy tendencies to it. We're already in a seasonal tendency that has seek and destroy tendencies to it. So I prefer to just wait until 3 o'clock and see if all the damage has been done. If we have an easy move to whatever liquidity pool it is, I would prefer that. So that's kind of me personally. I like waiting till like at least 3 o'clock, but there's definitely volatility there in the PM session on Wednesday if you want it. Thursday, 8:30, you have core retail sales month on month, regular retail sales month on month, employment claims, pretty typical, atypical news. Red folder there, nothing too crazy. And then Friday, you have a manufacturing index right before the 9:30 bell. You have a production month on month. And then at 9:45, you have flash manufacturing PMIs and flash services PMIs, which are also pretty volatile too. So definitely a pretty jam-packed week. If I were to just say to stay away from one thing, it would just be this right here. Do not be in a trade leading into this. You will get, whether you're right or wrong, you're not going to really get your fill if it's a big delivery. So this is a gamble no matter what. So just know that going ahead of it, please. Other than that, everything else is viable to trade. I would just say if you're not familiar with how FOMC is, let it just go without you. It's pretty volatile too. I would say the three big ones each month are NFP, CPI, and FOMC, and these tend to be on the same week. Most of the times, obviously, NFP is that first Friday, but there's just really those three every single month that you need to just be cautious of. It's pretty important that you take that seriously and you put yourself in a position to not necessarily feel the want or need to get into the market ahead of those things. It's totally fine and the right thing to do to let them trade without you. Other than that, that's it for news. That's it for news. So we'll go ahead and get into the DXY. I am dead tired today, by the way, guys. So bear with me there. Let me pull up charts. Okay, so dollar. Am I screen sharing, Henry?
Yes, you're good.
Okay, so dollar. We were talking about this weekly imbalance. Obviously, where are we coming from? We had presented the idea that this was a weekly order block. And with that being said, price delivered the following week prior into it, had a very clean reaction off of it on a weekly. We now were able to this week push up back above this equilibrium, right? Where am I getting that equilibrium? It's from the yearly low to the yearly high, seeing how price plays in and around that range. We were able to close obviously above the equilibrium, but then also, we were at least able to get some fill on this weekly SIBI. Now, here's my question is how we play going into this week is going to be curious to this previous week's high, right? How do we use it? Do we use it as support? Right, do we use it as support and work our way higher, digging deeper into here? Or are we relatively sensitive to that SIBI? And when we get back below this previous week's high, right, on lower time frames, do we use it as support and then find our way lower back through this? So that's kind of where I stand with regards to a weekly. I'm very curious. Now, if you go into a daily, same areas, not really adding a whole lot there. Was looking at this as potential market structure, right? This high, we had this high too. Price took this high, but I'm looking with regards to closure. I'm still relatively neutral. We're in a key area where you have a weekly premium array in the form of a SIBI right here that it's tapped into. And you also have a yearly price swing equilibrium right here and the previous week's high. And we're just kind of in between it, right? We with regards to closure and all that stuff, right? We closed below the SIBI, but we also closed above the previous week's high in the equilibrium. So I'm still relatively neutral. ES, I'll let Henry kind of cover it, but with regards to where we are within ES, it could continue to go higher, but it also has the potential to drop. So I am going relatively neutral into this week, especially with CPI. I don't know. I don't have a better, idea more than the other, right? We closed the week on Friday above the previous week's high. So really, I'm just going to be using this previous week's high to really guide me with regards to where the daily is closing. So, if we do come back and test it as support, right? Start aiming for up here, right? We haven't closed here yet either. So this could just be an internal liquidity draw, but looking to see if we potentially start to go out there. And then, does price want to purge this high and come back down, right? Something like that. It could. Maybe we don't even revisit this high, which I also think it's CPI week. So, you have to think about where this weekly candle is going to end up with regards to, CPI, FOMC. When you have a big volatile week, it's one of those things where you want to understand, all right, where is that weekly candle going to print? And as of right now, how we've reacted off of this discount array order block. We've pushed back higher. I wouldn't be surprised if we want to get a higher fill up here, or maybe completely fill it. That's where I'm kind of leaning towards, but we are bearish. We have been bearish. We're just in a kind of retracement. I just believe we're kind of retracing a little bit higher. If you look at the equilibrium between this low and the high that we currently have, right? So even if it wanted to push into a premium to then go lower, you kind of have that idea there of it potentially going a little bit higher. But there really isn't anything too crazy. You know, the only other thing I would do if I was looking at this on like a daily is you could look and see these inverted BISIs over here, right? You could see how price was using it as support here, using it as resistance here, right? Do we use it as resistance again here? There's another one right here that it's just kind of in the middle on, right? We closed back inside of it. So a couple things to note, but also still didn't give me enough data when we closed this week, right? I don't have to try to figure, I don't have to be the person right now to know exactly where it's going to go, right? I can let price do what it wants. We have a lot of news events going on this week. So I don't need to go into it with a solid ground bias. I can be neutral. I can be open to certain scenarios unfolding and allowing myself to see those, you know, as they do. So other than that, previous week's high, keep an eye with regards to daily closure, right? As you continue to close above it, I think you make your way up into here. And if you do get back below it, start to monitor it in the high in which it forms to do so, and start to monitor it to see if we start to get to lower and lower prices. And obviously, you know, we've got an unfilled BISI in here, and a sell side target would be 1025. But other than that, that's really it. Just gonna have to wait and see what price wants to give us on open and on Monday, and then obviously ahead of CPI, and let CPI trade. You know, I will not place a trade prior to CPI, so I also get to have CPI on Tuesday. Open that idea to what potentially could be the draw on liquidity for this week when that price actually redelivers instantly at 8:30 on Tuesday. Other than that, that's it for me on dollar. Relatively neutral, not too much going on. Just kind of got to wait and let it play out before I can kind of get a better grounding on it. Other than that, that's it for me. Let me check questions before they're. Okay, yeah, we're good on questions. All right.
I have a question, Carlos.
Yeah.
Based on your experience with CPI, when you said that you wait for Monday and the CPI print to find out the draw on liquidity, it is my understanding that CPI is only one way. So you as soon as you see that the CPI prints, let's say, to the lower side, then you start looking a potential draw on liquidity to the downside, and the same applies to if the CPI is, you know, is cooler than expected, so will go up, and I'm assuming that you will be targeting the high of the year.
Yeah. So what I like to think about with CPI, because like you said, it is an instant redelivery. It's something where when it releases, a lot of people will like to watch it on like the 1 minute or the 5 minute, because they just get to see this big candle. But that doesn't offer me a lot of information. So I actually will I watch CPI more on like a 4-hour daily, or sometimes even the weekly. I'm watching them on those higher time frames because I want to see where that it's a move in the market that no one's really going to participate in. Nobody is. So it's just strictly algorithmic redelivery and price. So it's going to go to a point where you cannot get in it. And so I want to see on the weekly and how that's playing out. So if we're filling something on the weekly, maybe it's not necessarily taking highs and lows, but to me, I like to view it as within my studies, is it's that opposing liquidity. It's like it's filling something to potentially turn around and go the opposite way. It kind of acts as like a Judas sometimes, unless the weekly shows it differently. So if there's no wick on the weekly prior to Tuesday, and it creates the wick on the downside and then starts redelivering higher post CPI, I'll look for buys. Because if you think of the power of the three concept, the candle body opens, you create a wick on the downside to fill whatever it is. And actually, I don't like talking with my hands, so I'll go back to my charts for a second.
For instance, we had a big week. We just left a big week on the indices
Yes.
this prior week. So
what I'm looking for is when the candle opens,
mhm.
when the candle opens, and I'm going to theoretically just say, I'll say we're on indices. So theoretically we open and we've kind of been going higher and higher and higher and higher. We kind of just play around, right? Price just kind of plays around, but then it creates on a weekly, a wick, and then price starts to move lower off of it. So like if you're looking at the open, high, low, and close, right? It's the idea that you want to be a seller above here because of where it opened, and you want to be, a buyer below the open. So with regards to open, highs, lows, and closes, on the weekly, you tend to get that wick on CPI. So like if I guess I could just show you a chart. Now, I'm not specifically using any of these wicks as CPI, but just kind of to show you. So if this was a CPI week right here, right, and let's just say this whole candle wick was just a move higher on, one second. So if you're viewing this wick, let's say Tuesday, price immediately pushes higher, but you're in this, and then it starts to, like on lower time frames, do this, like CPI goes higher. You have a failure to go higher off of that. You break that structure, and now you just start going lower, right? And all of this on lower time frames is happening up here. This is the CPI release at 8:30, and then price just starts to go in here. And let's just say there's BISIs in here too. Like along that instant redelivery higher, you see BISIs. I would like to see price, if it's trading into a higher time frame array, right? You always have to see what it's trading into on those higher time frames. I'd like to see price fail those BISIs and invert them and start to go lower. And I would prefer, let CPI go higher, but then I'm trying to capitalize on sells, right? I'm trying to capitalize on sells going lower based on where we deliver. So I think it's not as much like where CPI goes, right? It could go higher or it could go lower. It's understanding what it's delivering to on higher time frames. Are you delivering into some form of higher time frame array, and or are you clearing some form of liquidity? That's the question that needs to be asked. When the CPI gets released, you need to go on higher time frames and say, okay, are we delivering or taking or purging any form of liquidity in the form of buy side or sell side, or are we filling in inefficiencies? Are we reaching into any arrays? And then from there, determine whether or not you're going to get a opposing redelivery, right? If CPI goes lower, is it going to go higher for the rest of the week? If CPI goes higher, is it going to go lower for the rest of the week following? You can't really judge that stuff until you understand or know, okay, where are my higher time frame arrays? Where is it delivering to post CPI? How are we responding? Hopefully that kind of answers your question.
Yep.
Henry, you're good.
All right, is my screen coming through?
Yeah, you're good.
All right, cool. Okay, so we'll start on ES. There hasn't really been a whole lot new to discuss the past couple weeks because we've just been slowly kind of trudging along toward that buy side target we talked about off the monthly chart. All right, as we traded back up through this BISI right here and started to create this nice candle working up toward the buy side up here, it makes sense at this point for price to trade toward the buy side rather than going all the way back down toward the sell side. And it'd be nice to see a new BISI formed here on the closure of this monthly candle, but there are still 19 days to do that. So what I'd like to see from here is price to either just consolidate or work up toward the buy side above this high on the monthly chart. Dropping down into the weekly. can see we've already delivered above this high right here and into the remaining portion of that inefficiency there. SIBI, which is this candle's low to this candle's high. And then we refined it to this candle's high as that partially redelivered into that area. And from here, still just watching the buy side above here. It's important to note that a couple BISIs have been formed below. This one was the most relevant point of interest because we have overlap with this candle here, which would be your mitigation block on the weekly. But you can see last week there was no effort to reach back down into that. We got close, but failed to go into it, and then closed at the high of the week, which is more indication of bullishness to me, and and we can continue to anticipate a run toward the buy side of here. You can see now we're also getting closure above this weekly SIBI. So more confirmation of that bullish direction. And we took the previous week's high as well, right? So now that we took previous week's high, what I do is I drop down to a daily chart and I see, can we find displacement through the high? So I'm interested in what happens on Monday. Like, do we work back down into this area? Do we close any inefficiency that's potentially being created here? Meaning, do we trade back to Thursday's high and have an immediate rebalance? Or do we leave a gap in there and form a new BISI? Right? If we get a candle like, this, then you would be able to see a new BISI form in here, like that. Does that make sense? So if you see that, then you're creating new inefficiencies on the way up. That provides an area where price can retrace into and then continue working up toward buy side. If you don't get that and you get something like this instead, and price fills back in this area, does an immediate rebalance, trading back to this candle's high, then that indicates you could potentially have a retracement into as far as the higher time frame inefficiencies, which are the weekly chart here, that BISI. And then if it were to dig deeper, you have this one down here, but this is the one that I have my eyes on. And you can also look on the for other discount arrays. So I see this wick here on the weekly chart. You could take the consequent encroachment of that, 45.76, and that's an area that price can trade down to as we drop down to the daily chart. If you get that immediate rebalance and price trades all the way to here and shows an effort to continue trading lower, then you can trade down toward 45.76, and then below that you can trade down into the last down close candle and then the weekly BISI down there. Otherwise, we're just looking for price to continue using discount arrays and working up toward the buy side up here. These are all levels that you can watch for price trade to trade to on its way to the buy side. So these are just taking this daily chart SIBI right here from this candle's, well, it would be from this candle's low to this candle's high, but we have a volume imbalance here, so we include the volume imbalance in the area that we're drawing. So I'm taking it from this candle's close right here to this candle's high, and then since it's been partially redelivered right here, I refine that to that high. So the total area that's being drawn is this. Okay, and then I just put my fib on it from there to there. You can get the midpoint, and then you can quarter it as well. So these are all areas that you can look for price to be responsive at. And what you see is as price closes above these levels, that's indication that price can trade higher into the next premium array. And if price goes above them and closes below them, that's a sign that you can see a short-term retracement into a discount array before continuing higher. That's pretty much it on ES. Does anyone have any questions here? Otherwise, we'll go into NASDAQ.
Just a quick question. Where will you get invalidated if it takes that swing low and we do market shift structure on the
No,
daily?
because we have the weekly BISIs below.
No, correct.
So I'm
but
always
if
looking at the highest time frame. Oh, go ahead, Mauricio.
sorry, my question is, where will you get invalidated and start thinking that we will retrace lower? If we take on the weekly that swing low
That will
below
return
that
into
yeah,
into these inefficiencies.
correct.
Um,
So if
I
we were
would
to
look for
track that
price to
swing low,
return into these inefficiencies.
Mhm.
If I look at the lower times frames for that to give indication, because I'm just looking for where displacement is occurring. So
Mhm.
now that we've traded up into here, what I do is I drop down to the lowest high time frame chart that I use. So for high time frame charts, I just use monthly, weekly, daily, and 4-hour. So from the
Okay.
daily, if I'm interested in what's occurring down here, and I don't already have a daily BISI for price to trade into, then I drop down to the 4-hour chart and I see what's happening here. So on Friday, you can see that price traded down in the 4-hour right here and then worked up into previous week's high and started trading up into these areas of interest and created a new 4-hour BISI right here. So now what I look for is on Monday, does price trade into this inefficiency right here? And what happens when and if that does happen, right? If it trades into here and starts using it to trade higher, then I'm not so interested in the areas down here. But if we get closure through that 4-hour BISI right there, then I start looking for the other levels that I mentioned. So the weekly wick midpoint, I'll put it on here again just so we can see it on the 4-hour. You get closure through here, then you can start looking for here. Closure through there, you can look through for the low here. And then below there, if we go below here, likely we're going to be going into the weekly BISI.
And at that time,
if you
we
get-
will be basically taking like 4 PD arrays on the 4-hour, and more than 3 PD arrays getting violated means that we're looking for more downside, no? Even though we have buy side upside. These
Yeah.
questions are more just like planning the week ahead, just to see, because I know CPI will give us a big displacement to the upside or to the downside. So if it's to the
Sure.
downside, I kind of want to know, like, okay, if the displacement goes below, all these PD arrays more than 3 or 4, my understanding is that we're going, for more downside. Just trying to
Yeah,
to see on
you
my
could
studies
see on
how.
CPI. I think most important when you're going to any news event is to not lose focus of your higher time frame bias, because any news that we're seeing in the markets is just there as manipulation. It's there to sucker retail traders in, and it's there to offer an opportunity for liquidity for large players to get into the market. And so this is where we're looking on a higher time frame basis. So as long as this monthly candle is not filling this all the way in, I'm not looking to be short in the
For
market.
sure. Got it.
Then you go down to your lower time frames, and it's still a higher time frame. It's a weekly chart, but you can see what's beneath that, right? So that would be, if you trade all the way to here, that would be that monthly inefficiency that's potentially being created, being filled in. And so now I'm just interested in what's above that, because I don't want to see that filled in. I want to see price trade up toward here along with my bias. And so all I'd be interested on a weekly chart is this candle's wick midpoint, this BISI, and this BISI here. And since we're in such close proximity to the buy side up here already, I would prefer that this one doesn't even get traded to. It's okay if it does. If it does, I'd like to see price remain in the upper portion of it. Right, so if you take your fib from here to here and you get your midpoint, I'd like to see price remain in the upper portion. And the reason for that is if you look at the price delivery wheel, where price moves from consolidation to expansion, and then you'll have consolidation, you could retrace or you could expand again. But I don't want to see a reversal off of that, because if we get a reversal and start trading down toward these lower PD arrays, that's now indication to me that maybe we're not going to go up here. And so I don't want to see signs of a reversal. I would only want to see consolidation or retracement or expansion.
Okay.
And so I just watched this area. I'll get to you in just 1 second, Ismail. I'm just going to finish covering this real quick. And then, yeah, looking at the daily chart. So you don't see any inefficiencies here on the daily chart. So you drop down to the 4-hour, and then you can see where price can trade to from here. So you have that 4-hour inefficiency there. The price trades through that, then I just look for the next discount array. So that's the weekly wick, and then you have this swing low here. and then the weekly buy side imbalance there. The thing to note, if you are looking for any sell opportunities within this, is that the higher time frame bias is bullish. On the monthly and weekly and daily charts, we are looking for buy side to be delivered, which means if you participate as a short player, you need to do so with a different mindset and different intention, being that the play is likely going to be a scalp opportunity. You're not going to get as much out of it as you would with a buy. Like, if you just look at the difference in the moves lower, yes, you have some larger moves here, but look at the delivery up toward the buy side. You're getting large expansions. Look what happens when you get retracements. It's a small move and then a return back up toward the buy side. These are the moves where we want to be participating. Yes, you can be profitable within this, but your higher probability and larger range moves are going to be in line with the higher time frame bias. Go ahead, Ismail.
I was just going to touch base on the same point you guys are discussing, because I also struggle sometimes with lower time frame narrative. How is it going to deliver it to where we want it to deliver? And I think since we closed on that over that weekly CB, I think that could be a great area to watch how price behaves around that. Because if we're looking at the weekly chart as it's a 1 minute and we just inverted a CB, you're expecting that inverted CB to be touched and act as support. And also by just looking at the 4 hour here, we expanded and now we just consolidated, which we consolidated first week of the month, and that now we're expecting expansion again. And correct me if I'm wrong.
Yeah, I mean, that's what I would like to see, is ideally a continued move up toward the buy side. I think it's just important to note your higher time frame inefficiencies, because it's where price is trading away from at this point and leaving these behind. These are areas you can return into. But yeah, absolutely, when we trade over a previous area that we expect to respond as resistance, or at least as a speed bump temporarily, then that's extra confirmation that you can continue trading up toward the buy side target. So yeah, you can look at that area, that weekly CB right there, draw that out as inversion. I'll just mark out the whole point right there, and then drop out to 4 hour chart. And you can see the overlap and confluence of PD arrays you have there. So you have this high overlapping with a 4 hour BISI right here, also overlapping with the weekly BISI, or CB, excuse me, that's been inverted. And so you can look for how does price respond in this area right here if we do trade back into that. Note that the 4 hour chart did not close above this high as well. So that's indication to me that this one is likely to trade. So we can see price return into here. And then we just say, what happens when price trades into here? Does it trade into here and then start creating new inefficiencies on your hourly 15-minute chart moving higher? Or do you just see a candle closure through this BISI right there? And then if you do, then you can see a deeper retracement into these areas, here, down here, down here. Sweet. Any other questions on? Yeah, thanks for bringing that up. Appreciate that. Any other questions on ES? Otherwise, I'll go to NASDAQ. All good. Sweet. Okay, NASDAQ is showing same bullishness as ES, right? We have this weekly BISI down here, which we traded very nicely to the consequent encroachment of the midpoint right there. Also aligned with the mitigation block here. Perfect. And then closing at the high end, trading up toward the high. So next for NASDAQ is just a trade up to the buy side of the previous week's high, and then this monthly high up here. Weekly chart. Oh, daily chart, excuse me. You can see we haven't had any new displacement here yet. Mauricio, I'm just gonna mute you real quick. Just a bit of background noise coming in. No new displacement here on the daily chart, but we're gonna continue likely working up toward the buy side up here. See, we already traded down to the midpoint of the weekly BISI. So there's not really any need for price to continue trading lower. You see, we traded there, but look how all the bodies closed right around the high end. That's another bullish signal that price can continue trading up toward the buy side up here. And now, just like we did on ES, I'd look down to the 4-hour chart and see what's occurred within here that price can utilize to continue trading up toward the buy side up here. It's like a 4-hour. You could see here, I traded up into this 4-hour right there. You draw it like that, but I refined it to here since it's been partially delivered there. And then let me clear some of these up. Oops. So here you had this 4-hour right there, and this one down here. Know how we wick down into the discount array, but the candles are all closing inside this area right there, and then trading up toward the buy side and premium arrays right here. So we're expecting this area to trade up here, but any lower time frame PD array, like the 4-hour chart right here, we could expect to act as a speed bump. So this isn't the area that I expect to send price all the way back lower, but rather just offer an opportunity for a retracement into a new discount array. So right here, you have a 4-hour BISI, price can trade into there, and then continue to work up toward the buy side. We also have the last down close candle right here, which is together with a BISI. So I would look at this as to respond as an order block here. So pay attention to looking at the body, the opening price, and the midpoint, the mean threshold of the body right there, 1601.25. If you get closure through here and through the mean threshold on the 4-hour chart, then you can start looking for midpoint of this wick and the lower end sell side under this low, and then potentially a return into the high end of the weekly BISI down here. My preference would be that price does not do that and just continues to trade up toward the buy side up here. But if we do see that happening, keep in mind that the higher time frame bias is still the buy side up here, and any retracement should be viewed as a short-term retracement just into a discount array to continue trading higher. And so if you look to participate short anywhere inside of here, you have to do it with the understanding that it's going to be a smaller range move, and you have to be in and out more quickly.
Just a quick question, Henry, if I may. That
Sure.
big displacement that we're seeing here, that's the prior CPI. So in preparation for Tuesday, that's the CPI. So what you're saying is, if we were to work, let's say on Tuesday, CPI comes and we have a big displacement to the downside. What we wouldn't like to see is to completely fill that inefficiency, the big inefficiency that you have there, right? Because if it does, then most likely we're not gonna get to the buy side target that we have, correct?
Yeah, I just look at really at what's in the closest proximity to us at this point, and also where has price already traded from. Like here, if price only traded just into the high and then consolidated in this area, it could make sense that price could trade lower back down into the midpoint or just tap into the lower portion. But looking at how we already traded to the consequent encroachment here and closed at the high end of this, that's very obvious bullish institutional order flow. And now we're in such close proximity to the buy side up here that it wouldn't really make sense to me for price to trade all the way back down to here. We don't want to call ahead of the news where CPI is going to deliver to, because it could go either way. But as you see with these CPI moves, it is fairly one-sided, right? There's not much of a wick on that candle hang on, that's the, oh, that is a 6 a.m. candle. So that's your CPI right there. Okay.
Yeah.
So if you look at the opening price at 6 a.m., or I can even drop down to a hourly chart. I think you can see that 8 a.m. candle. Yeah, 8 a.m. right there. So just a small wick trading down into, there's probably an inefficiency to identify in here, and also your two last down close candles. So if price is going to deliver higher, a lot of times you do see a very one-way move with CPI. And so you could just look for what's relatively close proximity in discount and what's close proximity in premium. It depends on how Monday delivers ahead of that, right? Because if we get on Monday, if we see a new imbalance form, like a Monday just started trading higher up here, you'd have a new daily BISI right here, and price can just trade into that and continue working up toward the buy side. But the way I look at it is what's in the closest proximity, because what's likely is for price to reprice to an area that makes sense in terms of liquidity and inefficiency, right? If the intention on the higher time frame is to go up here and up here, it doesn't make sense for price to trade all the way back down here again, considering how it's already delivered to the consequent encroachment. While it could do that and still trade higher, what makes sense as a higher probability scenario is for price to just trade toward the buy side up here. But like I said, we don't want to be involved in the CPI move because it can go either way, and if you're on the wrong side of it, you can do some serious damage.
Definitely. Just, to prepare myself on how it's going to pan out, because we have a big implied move this week on both indices. So it's supposed to be a big move this week for sure. So just trying to plan ahead where can that go?
Of course. Yeah, that's all good to look at. I would just look at your weekly, daily, and 4-hour charts, identify any inefficiencies within this range, and then keep your interest on the higher time frame bias that we've identified.
I'll say one thing too. The NASDAQ actually in this situation, shows, kind of gives, I think, the potential, run away because of how it delivered in that weekly BISI and return away. And that shows me, when you're looking at something like ES, trying to figure out how it's going to potentially retrace, how deep it's going to retrace, all that stuff. It's not willing to push into the weekly BISI like NASDAQ was. So it shows me that it has an unwillingness to go lower like NASDAQ did. So it could be potentially stronger. And if NASDAQ did it in the way it did it, as clean as it did with the consequent encroachment and all that stuff, it almost seems like if you're viewing NASDAQ just at a whole, it seems as if we are in the middle of a move. Like we have created the low, we have a clear eye on where it's going, and we're just now in the middle of it. So, I don't really trade, I don't execute on the NASDAQ, but this is a good opportunity and an example of how it is used as a tool with regards to where we could go. With the way price is traded in NASDAQ, it kind of did what you would have wanted to potentially see on ES. Not getting that on ES shows you that there's a lot more strength. It has a lot more unwillingness to go lower. And it looks like if we're playing based off of just what NASDAQ is doing right now, NASDAQ looks like it is just in the mid. It looks like it's just about to go. Like it's about to go take those highs. It's taken, it's filled the inefficiency. It's acted with regards to closure. It's respected everything. It's already filled everything. It hasn't created any new BISIs on the daily or the weekly. So from that point forward, you kind of want to expect it to kind of just, I wouldn't be surprised if on Monday, yes, we can consolidate, but I wouldn't be surprised if we just start running higher. It looks like we are in the middle of the move going higher. So, utilize, when you're looking at indices, utilize that as a tool of understanding okay, I've got a weekly BISI on ES and I've got a weekly BISI on NASDAQ. They don't both always have to fill the same always. And when you're getting one to fill cleanly, that should indicate to the other that if it's not, there's this underlying one's more stronger than the other. And that's where, well, why isn't ES going lower and filling any of those weekly BISIs? Even though it can, it's not, because its strength and sentiment is underlying very bullish. It's extremely bullish. And that's why if you get something like NASDAQ and you're looking at it and you see that it did, yes, what's the word? I don't want to say correctly, but it did what it's supposed to do and it looks better. Just know that the other one that didn't is probably just a lot more stronger, or vice versa, weaker if it's to the downside. And so, when I look at NASDAQ, I see us potentially just being in the middle of a move right now, going higher. So, posts, because here's the thing too, is what if we take both buy side, what happens if we take both buy side targets prior to CPI? What if we just run up there on Monday? Right. And so then, you have all those highs. You have 16,264 and a quarter taken on NASDAQ. And you also on ES have the highs at, it could be anywhere from, 46, 45. If you take the highs prior to CPI, that's another thing that you have to keep in the back of your mind. Well, then what does that open up? Right. What does that potentially open up for a reversal after buy side's taken, or do we displace even higher through the buy side and then continue going higher? So there's all these things, and I think that you can use the two and knowing where the other one's going to go. So it might not look as clear on ES. To me, it looks very clear on NASDAQ where we're going, and I have to trust that and know that odds are, to me, gun to my head, we don't get that retracement lower into those weekly BISIs on ES. NASDAQ did it for us, right? It's just showing us that ES is stronger. I want ES to continue that behavior going into even early this week and sit there and go higher and higher and higher and higher and higher until the buy side's done. Just food for thought there.
Yeah, I'm on the same page with that. Last thing I'll look at is if there's a projection we can look for. So let's see, I'd be interested in if we get closure through buy side, potentially we can start working toward this area up here.
Damn.
But we'll see what happens. We'll see what happens. And that. I mean, that could be a higher time frame delivery, maybe the month after, or not immediately necessarily. But let's see.
Oh, but it's not far-fetched. I mean, it's only 300 points away from where we are. And 300 points is 2% of that. And CPI give us usually a 1.5% day. So, yeah. I mean, it's really not. I mean, and if you look to the downside, it's also not too far-fetched to try to feel that prior CPI. So, I mean, it can go both ways, but definitely we'll reach it this week, one way to another.
Looks good. Any other questions from anyone on ES or NASDAQ, or did you have anything else you would like to look at? Let's touch on those now.
Axel said, what does US 50 look like?
US 50?
Uh-huh.
US 500? Is that what you mean? Or is there a US 50?
It's probably, he probably meant 500. I think he was referring to potential
because it's already run this high. Yeah, I don't really use the CFDs as an indication of reading bias and what's going to happen next, because the futures markets are one of, if not, to my understanding, the most liquid markets, and this is where a lot of the institutional participation is. So I would just focus on using the ES and NASDAQ charts and the futures charts, and keep your focus on the current monthly contract. That is interesting to note. It's not something I would necessarily factor into my decision making here. Anything else here, or we'll jump into the next thing?
I'm all good.
I'm good. Okay.
Exercises. to go over some exercises. So for this past week's exercise, we really just wanted you guys to do your own trade, utilize your own model, all that good stuff. Nothing too crazy here. We just wanted to make sure that you were, in a trade or out of a trade by Wednesday at noon for that NFP protocol. So Ismail said, as per my conversation with Carson, I took a break from taking challenges and decided to focus only on demo throughout December and January to build confidence and hopefully consistency as well. To be honest, I'm at almost break even with the demo account. I started 12 weeks ago with this group and it was getting to me immensely. So I decided to open up another fresh start and set the balance to 150K. Perfectly fine. Tuesday's trade. So Tuesday AM session, he was identifying a Monday Judas swing, Tuesday reversal. I was confident we were going to see higher prices today. However, we had a bunch of equal lows, so I wasn't sure if we were going to sweep them first. I missed the SMT with ES, which took the lows, so that should have been my confirmation to take an earlier entry. As we started displacing away from the hourly SIBI, I went long 2 contracts on a fair value gap with an order block with a stop below the order block. Got out at 3 p.m. for buy side for a 3 risk to reward. Looking back at it, it was a beautiful market maker buy model, right? So he's identifying lower SPY down here. See how it trades in this SPICY, beautifully trades away, comes down, there's order block, down closure, right? He's identifying price coming back down into it, looking at the accumulation, filling all that, reclaiming the order block going higher, reaccumulation, another BICY, price goes into here, right? Comes back and he's identifying this as an order block right there, and there's a little tiny BICY. He's utilizing that as a silver bullet. Great entry, great exit, right as that's there. I mean, beautiful trade when you're talking low resistance liquidity run. This is ideal right here. This is a really good trade. I know that obviously you have sell side here, but what's telling you that you're not going to take the sell side? It's the way price is behaving in and along this run. And notice how he's not getting in at the lowest buy. He's not getting in down here. He's not even getting down here. He's not even getting in right here, right? He's not getting in trying to get in at the lowest low, right? He's letting price show him all this to build confidence for a trade idea. And as you get closer and closer to the PM buy side that he's aiming for, price starts to make it easier to trade, right? And I would rather be in a trade like this where you get in and it goes to where you want and you get, a fraction of what you maybe could have gotten, but then also one, you have the confidence based on how price is traded, and your time is more important once you reach a certain point. So instead of having to try to sit here and navigate, trying to get in here and watch all that, which you can, 100%, you can find ways to, get in these entries and hold, but then this is in and out, quick, done. Got what you wanted, got what you needed. The risk reward's great. Overall, this is an ideal trade. I would rather be in this with this easy way into my, take profit rather than potentially being in a long choppy move, even if I get a couple more points out of it. So great trade there. Sometimes you do need a fresh chart though too. That's okay. Sometimes, that's why it's all demo accounts. And, even if, you're letting the community know, I think so. You're still holding yourself accountable, and that's perfectly fine. That's what you wanted to do. That's what you wanted to do. And it seems like the fresh start kind of helped you. Going into a different view of the time frame, right? After Tuesday reversal, I was looking for higher prices today. I was looking for an entry prior to 8:15 high impact news as price was respecting the hourly BICY and started showing signs of reversal, but I decided to stay patient and wait for 8:15. Once we respected the 5-minute implied or inverse fair value gap, and the 1-minute inverted the SIBI, I went long on 2 contracts with a stop below the low, targeting Asia's buy side and new week opening gap. Got out at the low, hitting fruit objective for 4.7 R. Emotions, I've been so impulsive with my entries this year, just trying to get in the low. So I'm trying to fix that and be more patient. So it's a mental battle on whether I get in late or give up the move. This is huge down here though, because what you're doing here is you're showing yourself that even if you think you might have missed a move and there's nothing to get in down here, you got in where you're supposed to get in, right? I would way rather have a trade when I get in, I have a low minimum requirement for drawdown. I don't take a lot of drawdown. I'm not in a lot of drawdown for long, and price just goes into my I mean, literally just deliver straight in within a matter of 3 to 5 candles into your target, right? And this is still a decent, this is the majority of the move, right? You got in with regards to your time aspect, right? You wanted it to get in around 8:15. You waited. You didn't let this catch you up on anything, right? You waited and then boom, right? Delivered straight right into it. It's what you want, right? This is bread and butter. This is what you want. This is the low resistance liquidity runs that don't come around as much in December, but they're still there. And this is great stop placement, right? Stop placement on how it traded into that order block. Beautiful. Look at the closure back above into the SIBI again. You see price start to creep out of it. You see this right there, and you're in on that next candle once it closes. I like the idea that once it closed above that SIBI right there, you were in it. So great trade. Henry, you got anything else for this?
Nope, no comments. Very solid.
I like also the
good waiting for that time frame in order to or not the time frame, but the time window in order to get that low resistance run. And there's nothing wrong with being a participant later. I mean, this is just, it just shows you more of what the order flow is, right? And just like we were talking about with NASDAQ too, as you see price getting closer to where you expect it to draw to, then it's a matter of proximity, right? You're probably not going to go all the way back down to sell side at that point if you're going to deliver to the buy side. And so you can expect that low resistance run and that speedy move to your target. So I think this is a great entry and great trade.
I like that you outlined the 1 hour BISI too, and you saw that we had gotten back above the upper portion of it, and you're using that consequent encouragement of it too. That's sneaky, but good. This was his old demo log. Hold on. So here, I'll show you guys too really quick. I gotta switch my screen. Old demo log. And then new demo log. So old demo log and new demo log. There you go. All good there. Great trading. Good stuff. Now let me share the screen. We'll go to the next one. All righty, Miss Kate, 2 back-to-back trades. Trade number 1, bias bullish narrative. We had already sold off for over 1% by New York Open. There was also no red folder news today. Given those 2 conditions, I thought New York would range instead of expand. We came into the weekly fair value gap and had a 4-hour swing low, and it seemed to be holding that level well. So I thought I'd have a chance to catch a trade back into the range. She saw the 2022 YouTube model develop on a 1-minute time frame, and we then displaced above the high again, this time closing above the balanced price range that I had marked. That seems quite bullish to me, so I thought that I'd get in each of the discountpedia arrays I saw, once inside the balanced price range, and another contract at the fair value breaker combo. Stop was below the fair value gap. Before, 2 things were emotions before, 2 things were bothering me before the trade. 1, I try not to trade Mondays, so I was just a little unsure about entering just based on this rule. I try to impose on myself. 2, higher time frames were still looking bearish, but I ignored both of these because I wanted to be in a trade. I think this is the focus, right? Identifying that, being aware that you just wanted to be in a trade. That's a key thing to know. You know, I get those days too, where some days I just wake up and I want to trade, right? And that can be a very quick precursor to knowing that that might not be a good day to trade, depending on what's on the charts or whatever. When you wake up and you have this preset emotion of I want to trade, like I totally feel exactly that feeling. I want to trade. That just allows for you to be a lot more susceptible to being influenced by emotion in the market. So you just want to try to be aware of that, right? And sometimes when I wake up and I'm like itching to trade, I kind of am a little bit more hesitant to do it. I was immediately in drawdown after the first entry, but I still had the confidence that the BISI breaker combo would hold us. Not too many emotions, except that I had already committed myself to this, so I just needed to see it through. After, a little bit annoyed at myself for trying to call the bottom, but I didn't have much time to stew because I knew that I was offsides. and that market wanted lower. So I went back in on a short immediately as price returned to the bottom of the BISI. So here we go. Once it loads. Okay, so she's coming in here. She's identifying, obviously, the shift in structure. Price comes into sell side liquidity on the 4-hour, takes it, goes higher, retraces back into here. And then this is where she's using a breaker. She's also using this fair value gap. She's also using this balanced price range in here. Got in a little, obviously a little early. This is a pretty higher risk trade just with regards to where and how it could retrace, but your stop placement is still good on the buys. I mean, I still agree having it below that fair value gap is still solid. You can see she got in with the contract there, price came in, she pyramided again here, and then from there it looks like got stopped out on both of those two contracts right as price delivered in here. You can see that get hit, and then she uses right here, which is I think underlying probably one of the best things, is understanding the narrative and the way the algorithm works. Well, if we just closed below this fair value gap, what should we use it as, right? If it was supposed to be used as support and it wasn't, and it closed and inverted from there, right? We pull up higher. What are we using it as, right? Resistance. And having that instinct to not hesitate sometimes and know that that's the solid thing, right? She took the two losses here, but still she wasn't so caught up on the losses. She overall, it looks like, was able to sell from the inversion of it and then go and buy it back here, right? And actually, come out with at least mitigating some of the loss. Trade duration, 8 minutes, 2 contracts, 2.27, 4.57, time of day, Monday, New York game session, right? Just note that those Mondays, they're tricky. They are tricky. Some of them are beautiful. Some of them are ugly. PD arrays used. She used this breaker and the fair value gap. Draw on liquidity was a 4-hour fair value gap consequent encroachment, right? Identifying potentially up here. Stop loss, a couple of ticks below that. Partials none, right? Now for the sell, right? This was her sell idea, right? So same trade, same idea, but she just understood that it took just invalidating some of these PD arrays to what she initially thought was going to happen. When price invalidated that, she knew the equivalent to that was price continuing going lower. So she had an 11-minute trade with 2 contracts at 2.92 and 4.37. Way to hold the trade. Kudos. Still on Monday, same time, same session, right as all this is happening. She's using an inverted fair value gap. She's identifying the weekly fair value gap consequent encroachment. Stop loss was above, which is key. Very great stop loss too. And above this fair value gap that she's wanting to be used as inversion. So very tight stop. She took partials, one at a hourly wick consequent encroachment. That's where you can see that right here. And then she went break even at 10.16. So obviously letting it get below these lows and then moving it to break even there and then kind of trailing it down, right? I think the biggest thing in here, 1, it's Monday. 2, you realized that you were wanting to get into a trade and what that can lead to, right? That leads to premature trades, not being as patient and letting price come into areas. That's where you see, your entry up here. It's totally fine. It happens. We're human. But overall, the way you responded to the loss, the way you were focused on the candles and not just your results, right? You didn't get down. You didn't spend too much time trying to figure out why or whatever the case is. You knew simply that when you had closed below and started inverting this fair value gap, that could very much lead to potentially, and you even said it on your notes earlier, right? You saw that we were potentially still a little bearish on higher time frames, and from there understood that it was, you didn't have much time to get an entry here either. That's key too to know, right? When price is doing sometimes, especially when you're inverting something, right? It's not going to stay here forever, so you don't have a whole lot of time to react. Right? You need to understand where and why it's doing what it's doing. And when it gives you that entry, you have to take it, right? Very good entry because you didn't, you were a participant, technically the only area in the market in which you could have been. Obviously, you could have gotten out a little bit later, but it very quickly rode down to your level. I'm sure you were able to obviously mitigate your losses here and then obviously come out a little bit in profit because you are getting better at holding, right? I'm glad to see that you're still holding these trades and you're letting it play. I remember if it was exercise 2, Kate would have been out at these lows right here, right at these lows, the whole position done, right? She's understanding the idea of, yes, pay yourself here, right? We delivered below the low, closed. You have the consequent encroachment. You're following it there. But then also even just these extra ticks, even though it doesn't seem like a lot over time, it actually does great movements. And then there's the business right there. You're catching up to me, Kate. I took a loss. I'll do my trade last. I took a loss this week. So yeah, this was just talking over the second trade, right? She was bearish. After that was inverted. Her original trade idea was us folding back into the range was wrong. So coupled with the fact that we couldn't make that headway into the 4-hour fair value gap, gave me the conviction to go short instead, right? That's a good way to think about it, right? When you take a loss in the market, that almost can present a very clear idea of a new trade idea going the opposite way. Trade idea, after I got out of my longs, I just used the same BISI as an inversion to go short. Draw on liquidity was the weekly fair value gap consequent encroachment. Before, there were maybe 10 seconds between getting stopped out on my longs and getting in on a short. So I don't think I really had too many emotions. That's what we call flow state, right? Where if you can picture yourself that moment when all that was happening, you're in a flow state, right? There was literally, like you said, probably 10 seconds between you getting stopped out and getting in on the short. And yes, people will say, well, sometimes you need to, not get in that quick. Well, when you're in a flow state and you are understanding of what's going on, this is sometimes the only thing that will keep you profitable on that day is in that moment, you're in such a flow state and you understand what's happening. So glad that you didn't really have too many other emotions. I added a second contract on the next candle as price touched the bottom of the BISI. Again, I was fairly confident that price wanted to go deeper into the weekly fair value gap below. Not too many emotions as I was okay with the risk. After, I was relieved to be able to get on the right side of the market on the second trade. I cannot be sure, but now I can't be sure now. I flipped short immediately because I was in a hurry to erase my drawdown, or I really had the conviction to short. That's a good consideration, right? Were you in a hurry to erase your drawdown, or did you actually have the conviction to go short the way it did? Also, I really shouldn't have traded today because it's Monday. I think that this is something that is good to ponder, right? And no one's going to know this answer but you. And that's something that you just have to study, right? On paper, it looks like you had the conviction and you knew it was going to go short. But we also know as traders that we never actually know. So it's just something to ponder. But I love the transparency here and the way you journal and the way you track everything. So it's good to note that. I think it just is one of those things where you need to understand deep down, were you in a hurry, or did you actually really were you in a flow state? Did you have the conviction? And yeah, it's Monday. Henry, anything else here?
No, I think this is just a really great example of how your understanding has developed of price action and the ability to flip right that like you did and then follow through with the trade. I think this leans more toward you understanding what was occurring and rather than just wanting to immediately mitigate the loss because of how you were able to hold that trade, right? If your intention was just let me mitigate, I would think you likely would have gotten out at the lows like you did, but you followed through with this trade, so you had an understanding what was actually occurring, and you let those partials run. So I think you did really well on this one, Kate.
All right.
This was NFP last week as well, right?
Yes.
This was a Monday, but okay. So yeah, I don't think you're wrong to trade that Monday either because Michael's talked about it too. The Mondays where you do potentially want to be a participant are on those NFP weeks. Otherwise, you're likely to have consolidation, but ahead of NFP Friday on that Monday, you can many times get a more substantial move. So just like you're saying here. So well done. Really nice.
All righty. Next trade. Oh no, this is Rondra Steed. Hello. I caught a 10-point ES trade today using a 5-minute fair value gap created on a market structure shift. I entered at 45.70 and exited at 45.50 after moving my stop up once a new break of structure was created. The pullback to the 5-minute fair value gap also held the midnight open, which was added confluence for me. As you can see here, she's getting in right here. She's getting out above these highs. She's got levels. I've got to zoom this in a little bit for my eyes. So she's identifying you. I guess she's got SMT noted on a couple areas, some higher time frame array, seeing how price traded off of it, seeing how price comes above the break of structure, comes in. You have this fair value gap right here, BISI. I like how you had a little bit more to fill on the BISI, and you actually were able to get in on that entry, filling the whole thing right in here. Very clear candle closure back above the BISI, showing that bullishness, and you're able to just take it to high, right? Very clean, easy run on liquidity. It looks like a long PT. I'm not sure what PT means. It might mean pivot.
Profit target.
Oh, profit target. So it looks like, I don't know if you took, I guess you just traded one. So yeah, easy. I mean, what is this? This is 45.70 to 45.80, 10 handles, easy peasy, lemon squeezy. Good run. I mean, it's nice, and people underestimate the power of 5 handles, but even 10 handles, right? And you know, if you can do that consistently, right? Super easy, right? You've got a simple 2022 mentorship model, market structure shift, BISI, filled. Now, the only thing that I would say is I would like to know where your stop was. I don't know if it was at the low, below the BISI. That's something that you know, you might want to add in the comments. But
Carson, where would you put the stop on that example?
yeah, I would probably put it below this area right here. So it would be at like 45. I would have it at like 45.63 maybe. I like it. I like it like right here, because you have, this is the candle that created the fair value gap. You also have a down closure order block here, and you also have a potential breaker in here, right? You have a low, a high, you take out the low, and then we take out the high. So I would like it right below this level. That gives me the comfortability of knowing that you have the BISI, the order block, and then the potential breaker to all sit there. And then I also note that there's also not really any displacement below besides here, and that's filled for the most part with a swing point. So if it wasn't going to be 45.63, it would be at this low right here, one of the two. But I would prefer 45.63. That's where I would.
But that's more than 5 handles, huh?
45.70. Yeah, so I guess if she's getting in at 45.70, she's not necessarily getting in at this low here. So I would also say, if I'm getting in, if my entry price is at 45.70 and I'm letting this deliver, once this candle closes, I'm immediately putting my stop at this low, because this has now all been fully filled. So I guess I'm assuming that at 45.70, whether she was getting in as price was coming down or she was getting in as price is coming up. Initial stop 45.70. I would have my stop. Yeah, at first I would have it a little tight or a little loose at 45.63.5, maybe 45, just in and around this level. But once price closes on this 5-minute, my stop's going right here, because now this has entirely been filled.
So it's fine to have a, you know, a little bit wider stop.
Yeah, and that's why.
So you don't get stop out.
Yeah,
that's what
and a lot of
happening
times
to me lately. That now that I'm day trading, like you put the stop like too tight, and then you get stopped out. And
yeah, I will say it's always better to have a little bit wider stop, and then understand where price is going to give you. Maybe price hasn't formed a great area for a stop yet. Give yourself a wider stop, and then it will. Like in this case scenario, right? Once price shows you, even though you're in the trade, right, it gave you a great area to put a stop 5 minutes into the trade. And so from there, you can have that stop be a little bit wider. And then once price does something like that, where it fully fills the fair value gap and then closes back above it, boom, great area for a stop. Let me put it right there. That makes sense.
thanks.
Anything here, Henry?
No comment otherwise. I think it's a great trade following the higher time frame.
Alrighty. Mr. Allen. This is the first time in a while where it felt boring to trade. I hope that's progress. It is. Trust me. The idea was a silver bullet type of trade, but trying to use these things I learned later on. This trade only took me 30 minutes. It probably signifies low resistance liquidity run. Happy to end the year on a good note, but it's only one trade, so on to the next one. So he's got a SIBI on the 15-minute, noting how we pushed up into it, delayed off of it. He's got his stop loss here, right at the high, following how we basically traded off of it right here. Getting in as we pulled up into here, right? Little tiny SIBI in here. He's getting in here. I think he probably had one on a lower time frame there too. So he's got 2 contracts short, delivering below the low, aiming for the consequent encroachment. So first, take partial is at the low. Second, obviously closing the trade at the consequent encroachment. Bada bing, bada boom. Very easy, very short, like you said. Once it gets a little boring, that shows you that you're kind of going in the right direction. So glad to see that you didn't necessarily you didn't get too high on it. You just it's just another trade. Easy, short and sweet, right? Nothing too crazy there. Yeah, anything on your end, Henry?
Great trade. This is a very similar model to the trade that I would take. What day was this from? I actually might have taken that same trade last week.
It looks like this was on 6 days ago, Tuesday?
I might have been in that same one with you, Alan.
Might have been on Tuesday. Yeah. So yeah,
Well
great
done.
trade. All
Yeah,
right,
very nice. Great entry, great target.
I will share my screen and go over my trade.
You're the last one this week, Carson. I didn't get this week with moving.
I'll
be back into it next week.
I'm on a losing streak right now. Honestly, I held the #1 spot so far in the community on the exercises, and I think I might give it away the next week or so to Kate if she keeps going the way she's going. So yeah, basically showing you guys really quick where and why I was doing what I was doing. You could identify all of this as a market structure shift. I'm on a 15-minute right now. I like the idea that opposing liquidity was taken here. I also like how we delivered out of this fair value gap, otherwise known as BISI, right? So seeing all this, seeing this displacement, right? I utilized this as a breaker. And then I also utilized this as a fair value gap. And really utilizing that portion of the overlap between the two, obviously noting that there is more room to fill here, right? So really noting that price could go and fill these levels if it wanted to. And this is a good, this is good for Mauricio because we're talking about stop losses, right? Where did I get in? Right here, right where I wanted, right? This is exactly where I wanted my entry. Where was my stop loss? My stop loss was right here, right? That was to me the only viable area where I accepted the risk, right? That's why I only traded with 1 contract, or 2 contracts, excuse me. We had the down closure. We had all of this that we could fill. So I have to basically give myself that. We got very close to it, came back up, and then I thought we were going to be able to get a run. Price was not having it. We just filled this SIBI in here and went lower. You can see me getting stopped out right there, right? Stopped out at 45.83. I got in at 45.88. So like around 5 handles. And there's really no better spot that I could really go, because even if I go in on a 1 minute, I don't want to go see it on a 1 minute. Right? I'm letting price deliver in here. I'm getting in here. And I thought that we had a perfect idea of power of 3 of consolidation, manipulation, distribution. and you have more displacement in here, just wasn't it, right? A lot of times I've seen this. This is like one of my favorite models to trade, right? You have this playing on higher time frames, but then this playing within it on lower time frames. A lot of times I have seen price just do that. Didn't have it. It was a loser. 45.88, 45.83, right? And that's why stop losses are so important, because you can see on this candle, right? If you don't have a stop loss, it's not going to give you the opportunity to think about what's going on. Let the market take you out where it's supposed to get taken out. So yeah, this low was the only viable place that I really saw with regards to it. And I thought that I had gotten away with it. I'm not going to lie. Price came down, got very close, came all the way back up. And as a trader, I have to make the decision, right? Where do I move my stop from here, right? So if I'm at this point in my trade, and my stop is here, right? Where do I move my stop loss? Because technically, if price wanted to, it could come all the way down to this volume imbalance and fill and go higher, right? You're talking about highest resistance and what it could potentially do. It could have came all the way here and did that if it really wanted to. So I still had to keep my stop down here. I guess, yes, I could have potentially gone break even right here, because that was about where my entry was. I could have went break even. But really, I would rather practice letting my trade breathe, get better with it, because if I would have gone break even, who knows what I would have done? Maybe I would have stopped. Maybe I would have continued to maybe I would have tried to go in on a long, whatever the case is. So really main thing to consider though, and why price went lower, is if you go back on a 5-minute, right? We still had displacement in here, displacement in here, displacement in here, relative equal lows right there. And I don't think we got quite below those lows, but that was my trade. If you want to see right here, I'll show you guys. I am on a little bit of a losing streak so far. And it's funny, the second I upped my leverage just a little bit, but yeah, you can see there. I think this is my biggest losing streak so far. Yeah, so definitely on a little bit of a losing streak right now. My balance high was a little under 111, back down to 108. So, you know, as I go into this week, just really trying to get myself a winner, right? Whether it's 5 handles, 10 handles, whatever the case is. The training exercise will be up this afternoon. It's not up right now. Me and Henry will talk about what we want to do this week for the training exercise. But whatever that is, right, just giving myself a win, right? Not trying to do too much. It doesn't need to be a big win. Just get myself right back on the side of the market that I need to be. Give myself that pat on the back, that confidence as a trader, and then keep going forward, not focusing too much on this. But, you know, that's another thing too, is when you are on a good run and you start to come off of it a little, that's okay, right? The idea is to, you know, just do what you can to try to reset yourself. Understand, okay, it's okay. Everything will be fine. Let me just go and get 5 handles. Let me get 10 handles. Let me wait for my model. Let me be a little bit more patient, all that stuff. But, and like I said, this is all just demo. So it's just practice. Practice. We are in December. My stats show me historically that I'm not good in December, but I'm still here, still trying, still figuring it out, right? I'll take this trade 9 out of 10 times. The only thing that I also was kind of looking for is what we ended up getting, I think later down the road, was just these clean highs, right? And that got taken on Friday. So had the right idea, was aiming for it, had my model, but time distortion with regards to where we were within the week wasn't having it. but I can't trade this half of the week. I can't trade here. I have to trade here. And I thought I saw my model and I didn't. It happens. But yeah, that's my trade. Henry, I know you were I know you didn't trade this week, but other than that, I mean, I don't really have anything too crazy. We'll get the training exercise up this week. I'm also going to try to get a Quizlet link put out in the social part of it for you guys who are a little bit more new. It'll have definitions, acronyms, pictures tied to it. You guys will like that stuff. I do want to say this is off topic from trading though. I'm curious to get your guys' feedback on these video calls. If there was a way that the video calls could be better, I've gotten some feedback. Some people like Zoom, some people like Google Meet. The biggest thing that's came on my radar is the way Google Meet is set up. The screen is not as big on the charts, and so it's a little bit harder to see. So if any of you guys have, ideas or what you guys might want, whether it's Zoom, whether it's Google Meet, whether it's a different platform, whatever the case is, just reach out to myself and Henry. It's something that we are looking into. We understand that the Google Meet is a little bit smaller with regards to the screen. And when you're looking at the screen, you would prefer just to look at the charts rather than the person talking. But we're looking in on that, but we love your guys' feedback on that too. We're trying to make this experience as best as we can for you guys. Other than that, I'm just kind of catching up. I was out of town all day yesterday, so I'm just kind of catching up here. But we'll make sure to get that training exercise out. Other than that, Henry, you got anything?
That's it for me. Yeah, back to normal this next week. Just been settling in from this move, but yeah, we'll get back into it and get things back up to date. I'll check in with you all on firsthand if you've left any comments or made any new posts in the forum as well.
So yeah, that's it. Thank you guys for spending your Sunday morning with us. Short and sweet, to the point, nothing too crazy. Enjoy the rest of your Sunday. Enjoy the week going ahead. We will make sure to get some stuff posted and out to you guys as the day goes on. Like we said, we're just kind of catching up. I know Henry's got a bunch of stuff he's got to do moving in, and I kind of got to get my bearings. I haven't really been here all weekend, but other than that, I appreciate you guys. Thank you guys so much. And until next time, see you later.
See you on Wednesday. Take care, everyone.
Peace.